you also know that we have different types of ledger too. Personal ledger, as I have said then, too. The personal accounts, when we're talking about those accounts. So these are prices of the suppliers, the personal accounts, and customer personal accounts, and it's divided into the sales and purchases. Sales and purchases. Then we have the general ledger too, which is all the turn sales account, purchase account, uh, sorry, the inward and outward and everything, the wages and expenses and everything, the assets, these are the ledgers. So just needed that you also have to know all these one too. It's needed that you know all these one too. And this is a format, this is a template of how a ledger looks like. So just like the one we just finished, also when you have date, you put the particular. Sometimes you don't put the F, which is the folio, but you put the amount. So you have the debit side and we have the credit side. So we have the debit side, so you divide it into two. So separately, we have the debit side and we have the credit side. As we all know that the debit side is the receiving aspect, while the credit side is the giving aspect. That's the that gives value, the one that sees value. So let's quickly now move to trial balance. Let's now quickly move to trial balance. So after you gather your source document, after you gather all your source documents, you've gotten everything you want to get, you record it in your prime book, which is your journal, when you have your sales day book, purchases, returning word, and everything, and cash book. Then from there, you take it to your ledger. After finishing your ledger, which is the example with you, after then, the next is trial balance. You prepare your trial balance to see if it balance. And after that, you now go to that's when you're now going into accounting proper. So now you now go to your trading profit and loss account. And after that, balance sheet. They are the main thing. Before you now start doing interpretation of it, interpretation of those accounts. You now start doing interpretation of those accounts. So trial balance. So what is a trial balance? The trial balance that list of all the ledger, as you can see, you have we did. The list of all the ledgers that we did initially. We listed it out. They are all ledgers. The cash account we open, the purchase account we open. These are ledgers. So list of all list the list of list the balances of all general ledger at a specific point in time to test the arithmetic accuracy of the account. It tests the arithmetic accuracy of the account. It has to balance when it comes to accounting because there's always a debit and credit, and it has to balance. It must balance. If it does not balance, then there's something wrong somewhere. That is where you now start doing forensic investigation to now see what exactly is going on, where have I missed it to have to now correct it. So it ensures that the total debit equals the total credit. Debit side equals the credit side. Must be if debit side is 100,000, the debit side must be 100,000. Debit side is 50,000, the credit side must be the same amount. So it serves as a preliminary check. It serves as preliminary check for errors in accounting record before creating financial statement. Before creating financial statement. So what's the nature of it? Nature of trial balance? Trial balance has column for particular debit and credit, as we have seen that time. It has debit side and it has credit side. It has debit side, I have the particulars, debit, credit. Particulars, debit, credit. All items with debit balance in the ledger will be debited, and all credit balance in the ledger will be credited. All balance in the debit balance will be debited. So after doing the balance on the trial balance, it will be at the debit side, and those balance at the credit side would be at the debit side. So as you can see, the format this is the format for it. As you can see, all assets debit, liabilities credit, expenses debit, capital, sales, income, credit, asset, debit side. You always see. So when there's increase in assets, debit side. When there's increase in expenses, debit side. When there's increase in liability, credit side. When there's increase in capital, credit side. When there's increase in sales that we see then, credit side. So if you notice, these are like formula. It's always like that. Increase in assets, increase in expenses, debit side. Increase in credit, increase in liability, capital, and sales, credit side. So as you can see that all item with debit balance in the ledger will be debited and all item with the credit balance will be credited, just as you can see from this we just finished. This we finished that all items that ends in the balance the debit. So the balance brought down. The balance brought down insurance. As you can see, this insurance 2,000 is on the debit side. Is on the debit side. So that's to be on the debit side. So this is what we bring balance brought down and bringing it down. That's what will be in the trial balance. Just like you have cash, the balance brought down or brought forward. The balance is brought forward will now be the one that will be in the trial balance. Now, at the end of it all, this is how much that is left, or this is how much. At the end of purchases, this is the balance brought. This is the balance that is now brought now debit side. At the end of sales, this is the balance we are bringing down to trial balance. This is the 220,000 naira. At the end of wages, same thing apply. And now see expenses, debit, sales, credit. So we always have it based on that format. Sales will always be credit, assets, debit, expenses, debit, wages, expenses, insurance, expenses, debit, cash is an asset, debit. So let's know all this. Let's know all this one. So this is just for trial balance. Let's continue to and let me see if there is anything we need to do on it. If there is one or two examples that we can do. Okay. Oh, there's one that we cannot exhaust. There's one. Okay, when we get to final account, that's when we now start doing more practical on it because of time, I cannot start doing one. It will take most of our time, and we want us to just go ahead and at least what we've learned today, go through it one more time again to be able to understand it very, very, very well. Able to understand it very well. We have seen debit. So purpose of balance is just to show arithmetic accuracy, provide data for the preparation of trading profit and loss account. So asset debit, expenses debit, as I said. Errors not disclosed by trial balance. Error not disclosed by trial balance. So trial balance is prepared purposely to show arithmetic accuracy, to detect error of entry in the trial balance. The two sides, that's debit and credit, must be equal, which we know. But if otherwise, then there is an indication of error. If otherwise, there is an indication of error. So in some situations, these errors, which may not be disclosed by the trial balance, are referred to as errors that do not affect trial balance. So the moment as one of our students asked, the reason why sometimes it might not balance. So if you make a typographical error, it might not balance, or you have not inputted a ledger into that trial balance. Maybe you put on an account that you omitted, you didn't put into the trial balance. So you make it now, oh, I've omitted an amount. So you put it there. You put it there, or you didn't write the correct amount there. So it makes you able to do all these things. But there are some situations whereby you might even make error, but trial balance will not show that you make error. But trial balance will not show it at all. So in some situations, there are errors which may not be disclosed by trial balance. These errors are referred to as errors that do not affect the agreement of trial balance, and that errors are happen in your ledger. The same credit error you did is the same debit error you did, so it will not show in your trial balance because the same amount you debited, is the same amount you credited, is two errors, so it will not show in your trial balance. It will not show in it. So we have the error of original entry, errors of original entry. These are errors that would not affect trial balance at all. These are errors when a wrong amount is entered on the debit side and also on the credit side. If it was just debit side alone and you corrected it on the credit side, you can see the credit. You will know from your trial balance. But sometimes, if it is both side credit and debit in your ledger, you will not know. And I've given an example: sales of goods 65,000 naira to Toby. Instead of writing 65, you wrote 56,000 instead of 65. This is an error of original entry. You will not know that there's an error there. You will not know that there's an error. So, balance sheet, trial balance will not indicate it. Trial balance may not indicate it. You will not know. Error of omission. So this is when you omitted completely that transaction, when you didn't record that transaction at all. So it will not affect. So both credit side and the debit side, you do not put it there. So it will not affect the balance. So when it's completely omitted, that's what you call it error of omission. An error of commission. So this is when a transaction is entered in a wrong person account. You know, those accounts, those two accounts, they are supposed to be paid. And you mistakenly, you not write it in the normal correct account of that person. So it could pose an error. It is an error, but might not show in your trial balance. So, for example, purchase of goods of 10,000 naira from Dayo, but you mistakenly enter it into Bayo's account instead of Dayo's account. So you now put Bayo, but it's the same 10,000 naira. So trial balance will not detect it. It will not detect it. And also error of principle. So this occur when transactions are entered in a wrong class of account. So like the purchases we were saying, that generator, instead of it to record it in assets, we went ahead to record it among normal inventory that is daily operation and it's an asset. So in a wrong class of account, it might not so you might not when you use purchases instead of using assets. So balance sheet, balance rather might not detect it. This error occur when transactions are entered in the wrong class of account, recording a capital account item in an expensive account. So balance may not detect it. Balance may not detect it. Compensating error occur when the error of the same amount are posted to the two sides of the ledger, therefore cancelling each other. So when errors of the same amount are posted to the two sides of the account, so the same error posted to the two sides, so there will always be an error. It will whereby it's not cancel each other, so it will not really affect our balance. Complete reversal also. Complete reversal. This occur when the double entry of for a transaction is reversed. The amount to be debited has been credited, and the amount that ought to be credited is debited. So it's like let's say the one that is supposed to be debited, you put it in credit. The one that is supposed to be credit, you put it in the debit side. So a receipt of cash from Babatunde 15,000 has been entered as credit side of credit. When you get 15,000 from Babatunde, and you go and put it, it's supposed to be debit cash, but you go and credit cash and debit Babatunde. So you misplace it. That's a complete reversal and duplicating error. duplicating error. So this error occurs when a transaction is recorded more than once in the book. You are duplicating it. You recorded it before, you are recording it again. So these are errors that will not affect trial balance. Will not affect trial balance. These are errors that will not affect trial balance. So what are now the procedures to be followed when correcting these errors? Identify the type of error, first of all. Is it an error of commission, error of omission, principal error, of error of complete reversal, and everything? So identify the two accounts affected by the errors. You have to know the two accounts. I told you there always be two accounts to identify it. Then interpret the error in the ledger, then prepare a journal. So we have to do a journal, really do a journal back again. So any question at this junction, because there's an assignment that uh, would also like to give, an assignment that I also like to give. Any questions? In the meantime, just give me just 1 minute. Just give me 1 minute, please. Just you can gather your thoughts for any questions. I'll be back. So, oh yes, any questions? Because by 1, 2:30, as I've been told, to rounding up. So you also know by that from the next session we'll be meeting, we'll be talking about. Just give me. Sorry, hold on.
Hello, Samuel, in case you're speaking, your mic is muted. We cannot hear you.
Yes, I intentionally muted my mic, so I was trying to get one or two things.
Okay.
So, okay, right. So I'm
Okay.
back. If there's no other question, then all right. So let me now give an assignment to everyone. Hold on, let me stop sharing. So, I'm going to give an assignment as what you've learned now. So let me try and open it. Let me try and open it so that we can all, by our next class, we will, I will ask everyone how far about it. Just give me a few minutes to quickly open it. Mm, okay, okay, okay. Um, mm, okay, trying to open it. Open. So why I'm still open, so next lecture we'll be looking at the statement of financial. We'll be looking at the statement of profit and loss. We'll be looking at the financial position also, statement of financial position, which is balance sheet. We'll be looking at bank reconciliation statement also. So how you can reconcile your your cash account with your bank account, all those uh, discrepancies that you want would face in reconciling accounts, just to make sure that everything balances. So we all look at all these. We will all look at all these by the next lecture. We will all look at all these by the next lecture. So just prepare your mind on this. So now as students, I want you to do so just imagine. I'm trying to open it now so you can all see. Okay. So you go to any eatery and make a financial projection, just your imagination and everything. Let's say a business like eatery. What will be the 12 years financial projection? No one to know. What do you think will be their sales? What will be the cost for advertisement expenses for the 12 months? A forecast, as an an accountant. So hypothetically, you are an accountant and you now want to make a projection. So I would like you to put a company name or your company name. So let's make this 1 year projection, 2025. So what will be your sales projection? What the amount you think you will have to earn? You think you're able to earn for the 12 months, for the period of that 12 months. And to make that sales, what will be your advertisement? How much are you spending on advertising and all other things and all other expenses? Salary, I want to know too. So I hope you can also this. So the main figures, let me know your sales projection and we'll talk about it, how much you spend on advertising, budget on it, salary, and all of that expenses that you know that are very important too. Just meet up your sales too. Your cash flow too. And every month, how much do you think will enter? You will realize in January, in February, March, thereabout till December. So that's an assignment. So we're able to discuss it very well in the next class. We look at it very well. So then income statement for the current year, though we've not talked about those income statements, but the ABC, let's look at it. And if we can go further about the income statement, let's now see. Let's now see on the balance sheet. Let's now see. So this is the assignment that I want us all to look through to do during that period. And when we meet in the next class, we will discuss about it. We'll discuss about it. So let's let you know that we're in trial balance. This is just finished now. So we'll be still talking about all other things that I've said. All of bank reconciliation statements. We talk about depreciation also too. We still talk about it, the accrual and prepayment. We'll talk about it. And trading profit and loss account with balance sheet. We pray there'll be enough time for us able to discuss it. Yes. Any question before I hand over to Mercy? So if there's no question, Mercy, can you take it up from here?
Good afternoon.
Oh, good afternoon.
My question is for this the type of error of commission, error of everything that you have mentioned. Is it a way that it can be practicalized as in kind of uh, that we kind of book to the kind of
Yes.
account to be prepared?
Yes, it can. Yes, we'll not because of time, we would have.
Oh,
So we've not concluded on this trial balance. We are still in the middle of it. So
okay,
all these ones will, but I'm only trying to
okay,
manage time because when we start doing examples of everything, it might take much of our time and we just have limited time. But there are examples we always show that we always show. Obviously, there is always going to be. So help me to help you, because of the limited time we have, it's better you look through, brush through, get the Facebook and look through it. Then we will. So it will be easy. To be easier here to discuss it and everything. But by the next class, we are starting from that. At least we'll take some samples, two samples of all these things, and we will talk about it. We work on it to show you that it will not affect. We work on it. I'm only mindful of the time. I'm already out of time already given to me by our anchor, our facilitator. So, and I didn't want to press go beyond that. So, reason why I didn't really give examples of those because there are examples for each one of them, but it will take our time. It will take our time. So, any other any other question? Mercy.
All right. Thank you so much, Mr. Samuel. I really
Thank
enjoyed
you.
your session today. Please, can we give him a round of applause in the chat box, or you can react to it, please? Let's appreciate our lecturer for today. He has really done well.
Thank
Thank you
you.
so much.
Thank you.
Please, can we appreciate our lecturer? Thank you. Okay. Thank you so much, everybody, for joining today's class. Yeah, thank you, Shoaib. Thank you. Thank you for everybody. We enjoyed today's class. I enjoyed today's class, and I know you did as well. So, a quick announcement before. Okay, so a quick announcement before we call it a day. So we'll be having him back in 2 weeks' time, and meaning we'll not be having him for next week, but in 2 weeks' time, we are going to be having a continuation of this class. Please, who is that? Please, can you mute your mic? Thank you. All right. So, like I said, he will be back to continue um, this teaching in 2 weeks' time. So, for the assignments that he has given, please, as usual, do your assignment and send it to the mail that was sent to the group. Okay. And for those of us that are still on this call and probably you came into the class due to the last class we had, and you have not registered for this 8 weeks program, excluding our NID students. Please, you can chat our WhatsApp line, and then you'll be given directives on what to do. Okay. And then if you still have outstanding to pay, please do well to make your registration fee. A lot of us are on the call, but we refuse to sign the attendance. Attendance also carries mark. So please, I'm going to be dropping the attendance again. Please, if you have not filled up the attendance before, do well to fill up the attendance. Okay? Fill up the attendance. And then follow us on all of our social media handles: Facebook, Instagram, Twitter. Engage us, mention us. We just need your engagement. As a student of Transformation College, we really need you to engage us. Follow us and like our post. All right. I think that will be all for now. If there is any other announcement, I believe you are going to get it on your WhatsApp platform. Thank you so much, everybody. My name remains Mercy, and do have a very wonderful weekend.
Hello,
Bye for
Messi.
now.
Hello,
Okay.
Messi, please. Yeah, so
Okay.
for the assignment, so everyone want the sample is we are taking a sample of six sensation. So let's take a sample of six sensations to give the forecast, the projection, and everything. So let's be uniform
Okay.
so I can see. So I just want to chip in that. Thank you so much.
Thank you. So the sample is sweet sensation. All right, that's taken. So
All right, thank
everybody,
you.
please take note of that. Do have a wonderful one, and bye. Have a very wonderful week. Okay, so before we start for today, just a few announcements. So, as you are joining the class, please do well to fill up the attendance form, okay? So, your attendance is also as important as your test, or sorry, your assessment and test, as the case may be. So please do well to fill up the attendance. So I noticed that a lot of persons do not fill up the attendance, so that's why I'm taking out my time now to explain how important the attendance is. So please fill up the attendance, okay? Then, secondly, if you are on this call and you have not followed us on any of our social media handle, please do so. It is important that all of our students follow us on our social media handles on Facebook, Instagram, LinkedIn, Twitter. Just engage us. Mention Transformation College of Business and Technology. Like our post. Just we need your engagement. Okay, thank you so much for that. And I believe that all of us, we are going to do that today. All right. So if you are still having issues for our NID students, if you are still having issues with your login details, please, you can chat me up. Okay. And then for some of us asking that we do not have student number, that space is only for our NID students. So if you are not an NID student, once you get to that point, please fill in your name there. So you don't need to put any kind of number there. Just fill in your name. I believe that is understood. And lastly, before we start, if you have any question, you can always put it up on the chat room. Okay, you can always put it up on the chat room, and then your question is going to be attended to. Okay, please mute yourself. At every point you mistakenly touch the mic, please do well to mute yourself so we can observe decorum. Okay, thank you so much, everyone, and I believe it's going to be a very wonderful class today. So without further waste of time, we'll be welcoming our lecturer in the person of Mr. Samuel Ayalekun. I believe I had that correctly. So please, let's welcome him to the class. Mr. Samuel, please, you can take it up from here.
Good morning, everyone. Good morning, Madam Nestle. I remember last year my name, your mother, actually did. So
Wow.
it's still the same. So it's all good. It's all good. I understand. So once again, my name is Samuel Anyola. Anyola. So that's my name. Thank you so much, Madam Nestle, Madam Hebe, and everyone, and also to my overall boss too. Um, Dr. Orlando, for this wonderful opportunity once again, to be on the call so that we can go on a roller coaster on this journey accounting. So I hope you can all hear me clearly. I hope you all can hear me clearly. I hope I'm audible enough. I need a response, please. At least two
Yes,
responses. Okay.
yes, we can hear you.
All right. Thank you. Thank you. Thank you. So once again, I'm so happy. All right. Thank you, Adibuki. Yeah. So once again, I'm so happy to be here to together talk about this accounting and everything. But one thing I will need from you all is, though you must have been hearing about accounting, and some of you must have been so have a biased mind because it when it involves math calculation, I don't want to get involved. I'm not interested and everything. No, I just want to tell you this morning that just please have a 360-degree open mind and let's do this. You see at the end of it all that you are going to enjoy it. Richard, you say you're not hearing me too clearly. I think you need to loud your, you can increase the volume of your, because I am speaking, I think, to the top of my volume. So if you can increase adjust your volume, maybe it will be okay. So, okay, so quickly, let me just brush through what we'll be talking about, the curriculum, what we'll be talking about, what we'll be discussing. So, we'll be talking about the history and principles, role, concept of accounting. The history, how it evolved, how it started, and to where we are now today. So we'll be talking about that, the roles and the concept and convention of accounting. We'll be talking about that. We'll be talking about the capital and revenue item. So just when we get to that aspect, please, I really want you to pay attention to that. The capital and revenue
Hello,
item.
hello,
So what?
Samuel. Hello, Samuel. Sorry to interrupt. In case you
Okay.
started sharing, we are not seeing your screen. Just in case it started sharing.
Oh no, not yet. Not yet.
Oh,
I
okay.
no,
All
not
right,
yet.
all
I
right,
must just quickly because
all
of
right.
time, because I know I have limited time. So I know we all have
Okay, okay.
the okay, thank you. So the curriculum. So I'll start sharing anytime. But let me let me share this my lecture note. Let me share that now. Okay. So I hope you can all see my screen.
Yes, we can.
All right. Thank you. Thank you. Thank you. So principle. We'll be talking about the principle of accounting. One, which the program, as you know, is business management and information technology and principles of accounting one. So that's BMI 114. So the curriculum, the syllabus, what we'll be talking about, we can't finish everything today. So we start in the next lecture. We complete everything in the next lecture. As I said, capital and revenue item, we'll be discussing about that. So I want you to pay attention when you see capital items, when you see how you know revenue item and capital items, you get to know that. Then the books of original entry, these are heritage. Books of original entry is very important that we also know that too as an accountant, as one who wants to have good knowledge of accounting. So you need to know the books of original entry and how to make use of ledger. We'll talk about that. Since we talk about explain the concept of trial balance, this is when we are now really going deep into accounting. Number seven, we know how errors are identified and corrected. How errors are identified and corrected. Then eight, we know the uses of journal. Nine, understand bank reconciliation statement. Know how to you understand bank reconciliation statement. 10, know depreciation. 11, understand accruals and prepayment. Then 12, okay, that's it all. That's it all. So accruals and prepayment. So without any, just cut the chase. So let's now start. When we are talking about accounting, first of all, there's no way we will talk about accounting without talking about bookkeeping. There's no way that we'll talk about accounting that will not talk about bookkeeping. And I want you guys to know, you all to know that every person, in as much you're learning, you know how to read and write, you should know bookkeeping. You should know bookkeeping. You should know it. You should know bookkeeping. So what is bookkeeping? Is the act of recording and classifying financial transactions in a systematic way. So I will always throw some light, give an example, and things we see on our daily basis and everywhere. Okay. So imagine a person, a sales girl, just at a bus stop at the roadside, they have putting on a tent, a canopy, POS, POS. He has he or she has a POS. He's doing POS business and everything. So, in as much this person has not gone ahead to go to school to learn accounting, but at least you will see that there's something this lady is doing. There's a little book beside her. Every transaction made, the person records it. Every transaction made, every transaction, either someone, the customer comes to take money, to transfer money, or to collect cash on this. There is always the owner or the sales rep writing it down, writing it down, writing it down. Oh, this is the person has come to collect 5,000 naira. Okay, write it down. What is the this is the this is what I gain. Put it down. Oh, this is the charges made collected. Put it down. So what that person is doing is bookkeeping. That is performing the act of bookkeeping. So it's keeping record of transactions, keeping record of transactions. So that's what we call bookkeeping. So it's that of recording and classifying financial transactions in a systematic manner. So way. So start recording it. Every transaction, every customer comes, she records it. Every customer and the type of transaction the person comes to do. Is it to come? Is it to do transfer? You see the person writing there, transfer. That is what classifying. Okay, if the person now come to collect cash, okay, it's cash. Also do what? Also do what? That is classifying it. How much is the person collecting? 2,000, 1,000. Oh, if it is 10,000, okay, the charges is 200. Classifying it in a systematic way, in a systematic manner. And that's why the person does it every time on a daily basis. On a daily basis. Entry them in an appropriate books as they occur so that the financial position of the business can be readily ascertained at any time. So at any time he brings or she brings the book at the close of the business and the owner says, let me see what you have done today. You don't expect the sales rep to now be saying, in the morning at 9 o'clock, Mr. TCK collected 5,000. No, who wants to hear that? This person was just bring out the book, see, and the moment the owner sees it, he understands. If in as much that bookkeeping is recorded in what is recorded and classified in a systemic way, then the owner was understands what has been written down and was able to ascertain the financial position, what this person has gained at the end of the day. Is he making profit or is this person making loss and this and that? So you now understand what bookkeeping is. So that's why you see also those shops and everything, all those shops, especially where they say maybe it's just spare parts or this or anything. You see every sale, every sale made, every customer that comes in buy something, there's always a book to record. There's always a book to record. There's always a book to record. So they're not just recording it for fun, they are recording for a particular purpose. There's a reason why they are recording it. There is a reason why I do not think it's just normal daily routine. No, there's a reason. There's a reason just to ascertain the financial position of the business at any point in time. At any point in time. Maybe at the end of the day, I've made it to some amount. Oh, hallelujah. Yes, I made so much today. You'll be able to know. At the end of the week, you know. At the end of the month, you know. At the end of the quarter, you know. At the end of the year, you know. So that's the reason for this bookkeeping. Now, so that is bookkeeping because we cannot talk about accounting without talking about bookkeeping. So it is very important that we keep bookkeeping. So that is even the first stage of it. So when we now go further into accounting, So what is now accounting? That is now going further than bookkeeping. So accounting is defined as recording as we have in bookkeeping, classifying as we have in bookkeeping. Also, it now goes further in creating. You summarize, you communicate, and you interpret the financial information. Now this time around, to interested parties, we all get it, all our interested parties, those who are interested in your record, those who are interested in your business, we get it. Because there are people that are interested in your business, not only you. So people are interested in your business. So this is when accounting now comes in. So it goes further than just keeping the record, writing it down and everything. This time around, there's a communication in it, there's interpretation in it also. There's even analyzing also in it too. Get a time that you even analyze the information to financial information to interested parties in order to help make specific business decisions. In order to make specific business decisions. So it is your financial statement when you know the decision you have to make. And at the end of this lecture, I will let you know that even any decision you want to make, what the moment you just see the financial statement of any company, you have to know, oh, should I take this step or not? Should I go ahead or not? Looking at it because it lets you know the position of the business. If this business is going to be, it's going to stand the test of time in the next 5 years or 10 years, or is it going to go insolvent? Is it going to proper extinction? You will know from their financial statement, considering it equal to their past record and their present record, you need to know where they are going in the future. So accounting now more broader and wider than bookkeeping. You can see that. So now what are now the difference between them? What are now the difference between bookkeeping and an accounting? Bookkeeping, as I say, is an act of recording and classifying transactions. Why when it comes to accounting? This includes the recording, as I said, analyzing them, interpreting them. We are going to get to a stage whereby you start interpreting it. It's the language. When you see it, you understand what it means, even though it's figures, but you understand the figures. You understand the language, what the language the figures is telling you. So, so accounting, when it comes to accounting, there's a language in it, and it's a global language to talk about. We are going to get to when it comes to generally applicable accounting principles. So accounting is more broader. And bookkeeping is just involve routine recording of transactions. And as I say, it's very simple. In as much you can read and write. And we will not expect you to have a sale, maybe you have your own business you're already doing, and you employ someone there, and you don't ask for record, then I will let you know that that business is heading to a doom. If you cannot ask for a record of what the sales of that day, no records to show, at least I am very sure you will not, or someone will not go ahead and employ someone who does not know how to read or write. So it involves routine recording of transactions, and it is the aspect, simple aspect of it. But in accounting, it's more complex because it involves designing of accounting. So that's when we'll now be talking about um, the trial balance, start doing the P&L account, that's the trading profit and loss account, start doing the balance sheet, start doing the cash flow statement. Not only that, when it now comes to those conglomerate businesses, those big businesses we have like Dangote, we now talk about group financial statement. So at this time, that's where one has now go on a professional level to learn about it or to go to university to study more about accounting because it's very wide. It's very wide. It's very wide. So bookkeeping is only a small part of accounting field and is limited in scope. But bookkeeping does not pass beyond recording, very limited. While in accounting, recording it goes beyond just recording transactions. As I said, it's very wide. Start preparing this, analyzing this. You have to dissect like you have a human being in an ICU. Just like you're having a human being in ICU, having surgery, you start dissecting, oh, this is the liver, this is the kidney, and that's how you do also when it comes to accounting to start dissecting, okay, this and that and this and that. And that's, I'm just giving you a typical example to start analyzing and everything. So one can be proficient bookkeeper in a few days, even though that person or that sales girl or you employ does not even have idea of accounting, or if you just tell that person in 2 hours or 1 hour, okay, every day when you open the shop, make sure you record this year, put this year, okay, do what this, put the profit here, and let me know at the end of the day, this is what you get. And that person, if the person has a very sharp brain, he understands it within this and he records it. But when it comes to accounting, you really want to learn accounting, so you have to be a professional. So you require several years for you even to be a professional accountant. So you have to, it takes years. In university, 4 years. Going also in the professional level, it takes your time and everything, it takes also years too. So that's the difference between bookkeeping and accounting. But we are not limiting ourselves to bookkeeping. We are going further to accounting so that you all will understand, you know what accounting is. So we are going to that professional level, a global level. That's what we will be going towards to. So our users of accounting information and financial statements, as I say, who are your interested parties, those who are interested in your business. So you don't think that it's the only you that you are interested in your business. Many people are interested in your business, more especially when your business is a very big business. When your business is a very big business. Number one, the owner of the business. The owner of the business is highly interested in his own business too. And what is the reason? What is the reason? Can someone just tell me why the owner of the business will be interested in his own business? What does he want? What does he want to know as the owner of the business? Can go into the chat box or anyone, just tell me if you own a business and why would you want to know your business? Why do you want to own that? Why do you want to understand that business? Why are you in that business? Owner of the business. Why are they interested? Yes.
Good morning.
Yeah, money. Money.
Good
I
morning.
go
So
to
the reason
yeah.
why the owner of the business has to know about accounting is to keep in touch whether he's in the profit side or the loss side.
Thank you. Fantastic. Fantastic. So the owner of the business will always want to know why is making either is making profit, either is making loss. He wants to know. He wants to know the progress of his business. He wants at any given point in time open the books and see, wow, I've made this so that he can make some decisions. That's why the owner of a business will always be interested in his business. Also wants to know the competence of his employees too, because he wants to know the competence of the person you employ. And this person is doing well. If this person is not doing well, you still retain the person, or you fire the person and hire a competent person. So that's why you always do, because you wouldn't want the business to die. You don't want the business to suffer extinction, just like that. You don't just go, phew. Or even considering the harsh conditions when it comes to Nigeria. So you always want to keep in touch to look at it very well. So you want to know the profitability of the business, so and everything. So also, interested parties, the management or the employee, also they are interested in the business too. Why? Because they also want to know the profitability of the business too, and they want to know if their job is secure, job security. Because the moment they start seeing loss, the moment they start seeing that salary is not coming in and well due, at the time they're supposed to collect it, even at that time they are not supposed to collect it, it's not coming in full. They now start cutting, paying in pieces. Then they know that their job is not secure anymore. So they are always interested in it. And the moment you even you want to go into it, maybe you want to get employed in a company, and look at their financial statement, or you now ask questions, and you now you start hearing, they don't pay our salary. Once you start having a rating, no, I think I have to take some step backward and look elsewhere so I will just enter into this situation. I don't want to find myself in this situation. So employees, management will always want to know this also. So and also to know the stability of the company too. They always want to know that too. And they also want to know if maybe someday my salary is going to increase or my wage is going to increase, it's going to improve. They always want to know. That's why the management will always want to know, even to know even their performance to an employee will always know this. Then shareholders. Who are the shareholders? Those who invest in the business. Those who invest in that business are called shareholders. So why would shareholders to why would they want to why would they be keen to know something about that business? Why would they be interested? Why would they want to use it too? So one of the things is just that some of you at this current is not quite long. All the banks, because of the policy of the CBN, actually the banks raise their capital to 500 billion. So some of those banks now start selling shares. So when meant to buy your share, you have now become a part owner of that bank too. Even though you can't make decisions because how much shares did you buy? There are some that have percentage of their shares so much that they can make decisions, but you have the shares. But before you can buy it, you can I just believe you can't just go ahead and stop and just buy it. Some will have given you information about this bank that if you buy it, don't worry, their capital is good, their shares is going to increase, and dividend they pay at interim and at the end of the year it's good amount, and if you can buy this simple number of shares, you get the dividends and this and that, and then you go ahead and buy it. So they want to know the dividends paying capacity of that company. They always want to know. They want to know the capital growth of that company also. They want to know the profitability of that company too. They want to know the future growth of that business too. That's why a shareholder will always be interested such in such business. So these are the decisions we make when we see the financial statement and say, okay, let me go ahead. Then also, government is also interested in your business. Government is also interested in your business. Who can tell me what government wants? What government wants? Yes? What government wants in your business? So don't think maybe government is just I do not doesn't want to do anything. Government also wants something. Government also is interested in your business. Yes, I want this class to be as interactive as possible. So even though you are wrong, just say something at me. So you are here to learn and everything. So what does government want in business? Yes, Richard.
I think they want tax, sir.
You think or you look.
Tax, tax.
And
Okay,
when you say you
tax.
think, so when you say you think, I'm just concerned about you think or you look.
Um,
Your network is breaking, but I get you. Yes, they want tax. They
I'm
want.
not.
Samuel, please also pay attention to
That
the
was why I
chat
said I
room.
think.
People are also responding to you in the chat room.
Sorry, come again, Madam.
Yes, please also pay attention to the chat room. People are also responding to your questions in the chat room.
Okay. Thank you. Okay. Thank you. All right. So I will. Thank you so much. So as I've said, tax. So they are interested in tax, and we have different type of tax too. The VAT, the withholding tax, and all kind of Lagos State will always come for the federal government will always want the VAT because the more if your business is booming, if you're making huge profit, there's a percentage of tax the government will need because the source is one of the sources of income of government that they use. So because it's a civil responsibility, every person must pay tax. So there's a CIT you pay, company income tax you pay, withholding tax you pay, VAT on every value added you do, there's a tax attached to it. So government is always interested in it. And also government to also make policies also because of these things making policies also. So they want to know if the environment is not conducive, they make informed decisions. So for example, let's say you have a company, rice mill and everything. You have so but because of importation of of rice is killing the local industry. We have industry producing rice, manufacturing rice, but because of importation, it's now killing the local industry. As a result, they are making laws. So it's not left for the government to make decisions that no, we don't want this our local industry producing rice to just suffer like that. So let's close all borders. Let's ensure that rice are not imported anymore. Even though rice is going to be imported, let's increase the tariff from the border so that when the cost is so much, so that when the cost, okay, all right, so I get you. Okay, I'll try, let me try and reduce it. Let me try and reduce my volume. So please, at any time, always let me know if the uh, you're not getting me. It's very important. Here to always to do any adjustment or correction. So at any time, this is very important. So I hope I'm better a little bit. I'm trying to adjust a little bit. So I hope I'm better. So Madam Edith, in
Yes, the
case
audio is better. The audio is better now.
all right, thank
Yes, we
you.
can hear you better. We can hear you better.
Wow, wow, wow. I'm so sorry. I'm so sorry. So so sorry. So okay, so let's go on. Um mm, okay. So that's government for you. And the same thing happens too. So I'm always trying almost just giving us all these examples too. And what we have currently now too, we can see the refinery, the crude oil, the petrol that we're battling with now in the country and everything. We are all in the know about all these why we've been importing crude, we've been importing sorry petrol. Though we have crude, but we don't have despite the four refineries we have, yet we cannot refine. We are still importing. So it's a decision for government to now do. What should we do? Because of this, every Nigeria is suffering from it. Why would you be importing petrol when we have finally four to say for not working? Why can't we establish a refinery? And this man, a businessman, has to okay, I can see because there will always be a need from a that to know how to create a business. There's a need that I need to solve. So let me build my own refinery that will be enough to feed the whole country. And it does that. I cannot see what is now going on. For selfish interest and this and that. So government policy sometimes can make or mar a business. So government will always be interested in your business just to make informed policies, decisions, to make decisions to help your business. But if government are so cruel, they can even force such business too, and the collection of tax and everything. So loan creditors, those whom you collected money from, they are also interested in your business also too. So when you have it, so most of the time you want to start a business, you don't have enough capital by yourself, so you collect loans from other people just to kickstart your business. They always want to know they are interested in your business so that they know if you can pay the interest, if you have the ability to pay back the interest. That is, they want to know that. They want to know if you are not someone that will default. If they want to know if you are someone that can pay business, pay back interest as and when due. Suppliers too, we also want to know about your business too. They always want to know about your business. So to make either to continue, they want to know that okay, your business is going on fine. It means that yes, then the they'll keep on supplying. They'll keep on supplying. They keep on supplying. They keep on supplying. They keep on supplying. So that's what happens. They keep on supplying the goods. So supplier will always be interested in your business. Customers too will also want to know, be interested in your business also. Then competitors. What do you think competitors? Why do you think competitors want to be interested in your business? Can someone tell me? Why do you think competitors will want to be interested in your business? Yes? Why do you think competitors will want to be interested in your business? Anyone talking? No one? Okay, so, well, not to waste our time.
There's a comment. There's a comment in the chat room.
Okay, I'm even trying to check the chat room to assess the, so I'm finding it not
Okay,
easy here.
someone says, all
Eh.
right, let me read it out. Someone
Okay.
says, some want you to run out of business. That is,
Is that
some of
not
your
bad belle?
competitors want you to run out of business.
You can see that as bad belle. Some people want to bad belle you. They just run out of business and get out. So let me just take the share and thereabout. So some, as you have said, yes, some people just want you out of the business. Yeah, it's fine. Some also want to compare, to make a comparative analysis to see if I'm really doing well in this industry. So a a a UBA bank will always want to see the financial record of a GTB or for a First Bank to see if I am doing well. So if a GTB is declaring one, let's say 500 billion profit before tax at the end of the year, and UBA want to compare, if this company is making this also amount, then I should be close to that amount too. So sometimes it gets to a level that some banks will start window dressing their account just to make it look fine in front of people and start saying, wow, this bank is doing well. But what have they done? They have window dressed it. So that's what competitors will always want to do. Just to compare their performance to, they always want to do that and everything. So potential investors to also want to know if either to go ahead and invest or not. If I should go ahead to invest or not. So these are for potential investors. Should I go ahead and invest? If I invest, would my money just go into the thing here? They always want to know. Then the public too. Everybody is interested in your business. The public too wants to that they are also interested in your business. So they have interest in your in your so just to know the economic the employment and economic consideration also they want to know. They want to know the issue relating to environment or also of interest to maybe, sometimes those companies do these social responsibilities too. They want to know if you can provide some social responsibility in the environment. I remember that time in my papa Dangote had to tie that road with concrete. So to just do some, so even though he has some contracts with the government, if I do this, you give me this and this and that, but he has to just what tie that road because of every duty, every trailers passing that road. So bitumen cannot do that place. So it has to be concrete. So probably, so these are users of your financial information. They are interested in it. So you can see reason why when you're in a business, it has to be very fine. It has to boom. It has to work right. Going concern has to be there. So history of accounting. How did it start? Accounting is very interesting, especially when you're someone that loves figures. And if you really know about accounting, you're interested in accounting, hardly would just someone just come and start, now want to defraud you because you know. So nobody can just come and just tell you anything and just take it hook, like and sinker. So you have to ask questions. So right in the early beginning of accounting, it was straight back to the origin of Egypt, that ancient civilization in Egypt, in Rome. So where recordings were done then in tablets. You know that tablet Moses took from Mount Sinai that has the Ten Commandments, that kind of tablet. I'm not talking about this present day tablet that you just touch screen and this and that. So things records are made maybe on the wall. You make records on the wall of things. Start making record of your
keeping track of some goods or taxes that they paid and everything. These are early beginnings, 4,000 years before Christ. These are things that happened then. So little by little, it start evolving. So we now have the medieval era. So during the Middle Age, where the rise of trade and commerce now emanating, start emanating. That's when we now have
I'm sorry about that. I think we lost him. Please give us a moment so we can get him back on the call. Thank you.
hello.
Yes, we can hear you.
Oh, sorry, I never knew I was
We can hear
out
you now.
already.
We can hear you now.
Okay, thank you so much. Thanks for the information for my WhatsApp. I saw that I never knew I was already out. So due to network. So I hope it's not foggy as I'm talking. Is it clear?
Yes, you are
Yes, your
clear.
voice is very clear.
Okay, all right, thank you. So I have been talking. I didn't even know where did I where if you can remember where I stopped. Let me share my screen again. So so I think we were
Yeah, you
there when I
stopped
was
at
talking about the
medieval era.
all right, thank you. Okay. So I think I need to just let my screen so I would know that if I'm out or not because I had to enlarge my screen. I never knew I was out. So the medieval level, that's when I said the Italian man, this Italian monk, Italian reverend, Lucas Pacioli, now had to was introduce double entry. So it's a merchant man that developed double entry bookkeeping around 14th century. Around 14th century, that's in 1494. So it was refined by Lucas Pacioli in 1494 and he now had to do a book. He published a book called Summa de Arithmetica Geometric Proportional L Portrait. I don't know how to call it in Italian. Let me not speak my teeth is not removed. So that's what at that time that was at the medieval level. So it now goes to it evolved. As it evolved, there are not trade and commerce. It goes to the industrial revolution during those time in America when we have like the J.B. Morgan, the Carnegie, the Rockefeller, that they start building they start building America with all those big industries and everything, employing people. So accounting has to, it starts to now start to evolve. Now start to evolve. So it starts where the structural revolution brought about significant changes in accounting. So they have now seen, oh, then this is not how we need to do it in this way. We need to now tweak it in this way. These are now to make it balanced. So, as more transaction is evolving, then changes are there. Generally acceptable principles are being established, being established. So more accuracy also are making it to be standard. More accounting methods are being created and everything. So this saw a period of establishment of accounting principles and the birth of professional accounting bodies. At that time, professional accounting bodies have to come out. The American Institute of Certified Public Accountants came out at that time. So the Institute of Chartered the Chartered Institute of Management Accountant, that's CIMA, came at that time. Of the Institute Chartered Accountants, England, also came out at that time too. And the Institute of Chartered Accountants, Scotland, also came out as at that time too. Those bodies now start coming out. All those bodies now start coming out. Now it now came. You all know it came out in Nigeria too. When we have ICANN, I am sure we all are familiar with ICANN. So ICANN also came out at that time too. Also, which was established, it was first of all established in 1960. It was established in 1960. So, and it was the federal government that to pass an act in 1965. So, and we are now the first Nigerian chartered accountant. You all know that Akipola Williams, who of recent, was it last year or this year? I can't remember. That passed on, that that passed away. So, and at a very young age, 104, 104 years. So the man tried. So he was the first Nigerian accountant. So that all these bodies came up, making sure that accounting are well acceptable all over generally and everything. So we now have the 20th century, which you have the 20th century, which uh, witness a surge in regulatory oversight and other development of accounting standards and everything. So we all have this. Then we have the generally acceptable, as I've said, to the further a generally we have the gap, the generally accepted accounting principles. So that's when we now have the IFRS, we have the IAS. IAS is that the IAS is then the International Accounting Standard. All these committees, all these bodies were established to just make sure that accounting is standard all over the world. So that means the accounting that is being presented here, that is recorded here, analyzed here, classified here, is the same thing all over the world. So that means if someone else in another country to pick your book of record, your financial statement, they only speak one language, they understand it. This is why these accounting bodies are being established, the international accounting standards. They are being established, accounting committees. So they make accounting standards, about 41 standards, that this is the things you must do. This is how you must present this. This is how you must present that. It talks about this, talks about assets, some talks about your recording. So it must be unique. It must be uniform. Uniformity. It must be. It must be uniform. And also, we have the IFRS, so that's the International Financial Reporting Standard, who has their own standard, too, which is even more wider, more broad than the IAS. So that we have. So that's the 20th century. So we have the modern day era, the era of this AI that we have now. You know what AI is doing now. So when it comes to all these things, so AI has made it somehow easier for all accountants to be able to do their work. Advancement in technology has revolutionized accounting practice. Computers and everything. We have ERPs, we have those platforms that what we just do is just type in all the ledgers, type in all the transactions, and it will generate what you want. It will generate what you want. Whatever you want, it tells you. Those artificial intelligence and everything, it tells you what you want. So these are the history that we need to know. That's the history of accounting that we're talking about. The history of accounting that we are talking about. So, why is it now important?
as we have discussed before, why is it not important for bookkeeping and accounting? We all know all our reason why it is important, not for righteousness sake, but it's for profitability purpose. So most of all these interested parties, we all know why some of the reasons why they are interested. So you all know. So for profitability, we want to know if your business is doing fine or not, because you cannot continue on a business that will start making you loss, using your money every time. The moment you discover that, you want to close the business. But what's the essence of making loss? What's the essence of making loss? So that's the reason, that's the important, one of the importance of keeping bookkeeping and accounting to make decisions too. It makes you make decisions when you now see that this it has gone down this year. The next year, what should I do to increase my sales? What should I do to increase my revenue? These are decisions you have to make. You always have the when you say New Year resolution, in every year, January 1st, you always have your year resolution, even personally. Even business today, you always have to their new year, the year, the following year, what are their plans? What are things they need to do? How do we increase from 100 million to 200 million revenue? So you make decisions. Is there need to extend more? You now have to have more branches, this and that. So to ascertain, so also to ascertain your financial position, you just know the state of your business, you know the condition, if it is LD or not LD. Planning purpose. Ascertainment of your assets. From your financial statement, you know your assets, you know your liabilities. From it, prevention of fraud also. You know, it's only those accountants that can detect fraud. So when they now check into the books, they look into the books of record, they start looking at it. Okay, you will do this, you do this for this, you do this for this. That's where fraud are being detected and everything. So monitoring the progress of the organization, tax assessment, then making economic decisions. So I'm giving you all this for you to know at least about accounting. So then let's now go into accounting itself. Let's now go into accounting itself. Since you already know the reason for those accounting, so let's now see what the accounting itself is, what it is. As you can see, accounting equation. There's equation in accounting. Just like sometimes you have your almighty formula. I guess yes, the almighty formula that you say. So there's also accounting equation. So it is the fundamental framework of the entire financial accounting. So when you understand the foundation, when you understand the framework, it will help you, even if you want to now go on a professional level, it will help you, it will assist you. If you can know this foundation, it will really help you in your understanding better when you now start going deeper into it. When you now start going deeper into it. So the equation can be expressed like this: asset equals capital plus liability. I wish I was physically there. I would like say, repeat after me. Asset equals capital plus liability. But since it's virtual, so it might really be difficult to hear you. So asset, your asset equals capital and liability. I'm repeating again. Asset equals capital plus liability. So what are assets? I'm sure most of you must have been familiar with what asset is. So these are properties or resources of a business organization. So when we talk about the land, the premises, your motor van, your furniture and fittings in your office and everything, all those things you see, the real account, the things you see, your office building, your land, your motor vehicle, excuse me. So everything is your cash, your inventory, these are assets. How did you get that asset? How did you get that asset? Those things. It must have been from your own money that you put into the business, which is called the capital. It must have been the way you got those assets, every that we just mentioned it. It must have been either the money you've been saving to start that business, which is called your capital,
or the money you borrowed from outsider to buy those things, which is called your liability, or both. That's why assets will always be equal to capital plus liability. So when there's increase in the capital, that means there will be increase in the assets. When there's increase in the liability, there will be increase in the assets. When there's a reduction also, there will be reduction in the assets too. As you can see. So liability, as the Yoruba call it, basic, is is the indebtedness of a company to outsiders. So they are obliged to pay out money at some time in the future. So as you can see that creditors too, as I say, loan creditors will always be interested in your business to know if you can pay me back the money I borrowed you. So you're not giving me so we're not going to court. So I will not enter litigation. So start sending my lawyer, this person is owing me this, and you have to pay. So that is it. Or the capital. So it's the total money provided by the owner to start the business. So the total money to start a business. So I even before I just quickly so if asset is equals to just hold on. I let me um just want to ask something quickly. So if asset okay, if asset equals capital plus liability. Now in math, let's now carry the capital to where asset is. What will capital now be? Capital will now be what? If you do what do they call it? You transposition or thereabout. You, you take capital where asset is, and you take asset to where like so what will it be? Please, I need a response. Let's see our math. Let's see if will be so if asset equals capital plus liability, then what will be capital? Anybody? What will be
Asset
capital?
minus liability.
Asset minus thank you. Asset minus liability. So what if I now put liability where that this asset is? What will be the answer?
Asset minus capital.
Good. Asset minus capital. Thank you so much. So it means we're all following. So just note this. So if that is what it's going to be. So most of the time when you increase more of your capital in the business, it means that because that money you put in, it will increase your assets. It either increase your cash or your money in your bank, or you maybe use the money to buy another thing, maybe another motor vehicle. It increases your assets. But the moment it reduces also, it reduces your assets. So this is how it happens. So roles of accountant. Accounting is very broad. So we have different type of accountants, just like you have different kind of doctors. We have doctor of the eyes, we have doctor of of what again? Doctor of children, gynecology. We have this and that when it comes to doctor. So when it comes to doctor, you can now what area of profession do you now want to base on? The same thing to an accountant too. So they also have different too. So what are the roles of an accountant? So an accountant in an organization. So recording of transactions, that's their role. They have to do that. Preparing of financial statements too is also their role. It is also important. Budgeting and forecasting. As an accountant, you need to budget, you need to forecast. You need to know what to be spent, what is likely spent. So I hope my network is okay. I hope I'm clear
Yes,
enough.
we can hear you loud and clear.
Okay. All right. Thank you. All right. So budgeting, an accountant has to budget for the following month, start doing budgeting. So when it comes to okay, I'm still going to get there, but I'll talk about this budgeting when I get to that time. So, and as an accountant, you budget, you forecast. So you do forecasting. Auditing too is an accountant that is accountant that does auditing. So that we have the auditors. They're also an accountant, but they specialize in auditing the books. That's when they have to detect where fraud is. We have the auditors to now check to see if truly you are following the standards as laid down by the international financial reporting standards. We are following those standards. So these are work of the auditor to make sure that we do that too. So tax planning too and compliance, you comply with uh, every tax that needs to be paid to the state government, to the local government, to the federal government, and accountant. You need to ensure that all these things are done so that you won't be sanctioned, so that you won't be, the government won't sanction you for this and that and everything. And compliance with all other regulatory bodies, those who are interested in your financial statement. So also you analyze the financial statements. You have to do analysis. That's when you start dividing it. Okay, you are profitable at this first quarter. We are not profitable at this, so we need to step more in next year so that we meet some needs. If it should go down, it might we might be insolvent. An accountant will have to analyze it. We are not becoming liquid. We need to get more money, enough working capital. I think to pay. So a financial accountant needs to do all this analysis. Also internal control too. Internal control. They have to ensure that money is spent to exactly where it's supposed to be spent. So nobody will just come and tell you I spend this and you be biased and instantly just take it to like and think you have to verify, make control so that there won't be any fraud internally. So it's an accountant to ensure all these things are done. All these things are done. The management accounting, you present an account to the management. You see, let them see how we're faring, let them know the position, and also financial advisory. So that is for the role of an accountant. That's for the role of an accountant. Then the principle of accounting. So we are getting there little by little. Let's not forget we have the assets, capital, and the liabilities. We are now moving into the accounting little by little. So I just wanted to, I'm trying to emphasize all these things. We know what our assets is, the plants and machinery, the generators you have, the chairs and table, the curtain and everything you have. These are your assets, the land and building. These are your assets. You have the inventories too. Also, what your maker of your business too. If you are if you're a company that sells laptop or sells software, these are your inventory and everything. It's more like maybe an advocate that has a shop selling those provisions are is the inventory and everything. So your capital is what the money you put into the business, and the liability is the money those outsiders borrowed you, and you have an obligation to pay back. So the principles of accounting is also known as GAAP, generally accepted accounting principles. Generally. So when I say generally, it means all over. That is why I spoke about the IAS, the International Accounting Standards. So as accounting was evolving, all these bodies were being established just to make sure there is oneness, there's uniformity in account when it comes to accounting. So generally accepted accounting principles. So there are sets of standardized guidelines and rules that govern financial accounting and reporting. So these principles are consistent. These principles ensure consistency. So this is what you follow and you must follow through. Transparency is also comparability. You compare. You can compare within country, can compare outside country, though so currency might not make it really compare, but you have to convert it to your own currency to it, be able to know how you're faring. So these are principles. So now what are the principles now? What are the principles? So I want us to pay attention to this. Let me start from the acquire principle. As a company always follow acquire principle. So what does it say? Revenue recognition and expenses recognition. When it comes to revenue is recorded when it is earned, not necessarily when the cash is received. I will explain. Because it's accrual principle. It means that the moment you know that you have gained this job. Let's say, for example, you've won a contract, you've won a job, they're giving you the contract award, is yours. They told you, oh yeah, okay, go ahead and mobilize or go ahead and supply us this good or go ahead and provide this service. But they've not paid you one kobo. Record it as a revenue. You just record it as revenue.